advise the viewers who are on this on how do they continue with the construction activities?
There are many ways in which we can continue, but I was actually looking at asking Srini on this issue more than I answering it, because he is the boss on this. Srini, what I'm understanding is that there are a lot of special situation funds which will come now to assess this. And world over, the special situation funds are generally there for the purpose of risk taking. What I've seen in real estate, that all the special situation fund comes wants the return of the world which they seek from risk taking, but from the project they want 3 times security. So there is no risk taking at all, but the returns expected are so high by this special situation fund that ultimately that will create a chaos in the sense that the project can't support this kind of returns in today's time. So how do we address this? Because ultimately what we are all talking, funds coming in the last mile will be from special situation funds. But if the returns are going to be expected in 20 plus, what is generally special situation funds expect, but they expect this world over because there is absolutely total risk in it. But when it comes to real estate, I have not seen any funding with a risk in it. Is funding only last mile, fully covering, ensuring that the previous lenders don't get anything till they get out, but the returns they expect 20. How do we resolve this, Srinath?
Very good point. Well, very, very good point is that, there is hardly any risk if it is, and then, but the return expectation, perhaps the project cannot support that return expectation.
Anuj, can I answer that? Srini, can I take the trouble of answering that?
Please, ma'am.
Please go ahead.
There are 2 things that need to be addressed. One is that, don't point fingers at the institutions. If you find that the viability of the institutions' conditions are not what you want, don't take it from them. You're thinking it is viable and that's why you're taking from them. There is no gun put on any developer's head saying that take the money. You've gone there because you need the money. So let's not kid ourselves by saying they are the ones who are taking away the cream. And secondly, unfortunately, if you go project by project, over a period of time, you can talk to any of the institutions. The developer's equity in most projects are not there anymore. So actually the developer is not at risk. It is the institution that is completely at risk, whether it is the lending institution or the equity institutions. I think that rethinking has to be done, which I've been talking in all these forums, saying that please bring in some more equity into your projects. And I'm sure at that point of time, all banks and financial institutions will also be able to help you a little more. Am I right?
Tara has answered the question, but let me add to what she said.
Yes, please do.
Go ahead, Srini.
Let me add to what she says. I think, Vimal, you're right. It is a reality that fund managers have been given capital by their investors with certain return expectations. Now, as you rightly said, खाने में तो थाली में तो उतना ही खाना है. Question is कि कौन रोटी खाता है, कौन सब्जी खाता है, या कौन रोटी और सब्जी दोनों खाता है. खाना तो उतना ही है. The point is this: in the return expectation of these global funds is unlikely to change. If anything, today they have a choice of markets to invest in. But in the Indian context, where the project returns are not there, are lower than what the investor is expecting, it naturally means that somebody else has to suffer, whether that is a lender or, as Tara says, the equity owner, which is the developer. But in the current context, much of the capital that has actually gone into any of these real estate projects has been from other lenders. So we have always had this struggle as to which lender is going to get paid in full, because most financiers have assumed that the equity value to zero ho gaya hai. The question is that, and then the trouble that we always have with the developers are eternal optimists. I'm also an eternal optimist, and hence their projections always assume either faster sales or higher prices. And the reality of it is that that's not happened in the last 3 years. And given all this, that may be a difficult assumption to live with. So everybody is going to take some pain, including existing lenders. And that's how those return parameters will be met. Having said that, the reason I made the earlier point that the government must then give protection to all other financiers on last mile funding will reduce the cost, because while special situation funds may say, "Mere ko 20% return chahiye," NBFCs may be happy to provide capital at maybe 12 or 13%. But if they are given the last mile funding protection, I think you will be able to bring down the cost of financing. But there is no taking away from the fact that special sit fund, by definition and by mandate, are expected to generate that kind of return, because the investor who gives that money expects that.
Got it. And then Srini, it will be right, and Taram, perhaps it will be right to say is that, as the risk continues to go down, the cost, the expectation of the return from this special situation may go down. Would that be correct?
Absolutely.
Yeah. Brilliant. Yeah. Thank you very much. Thanks, Vimal Bhai. Fantastic to have got that clarity out. Two questions that Srini, a lot of the viewers are asking. It wasn't in the script that I prepared, so I'm going to ask you is, first is, what are the parameters that Kotak looks to give debt to a developer? And the second is an interesting question, that if the lockdown was to end tomorrow morning, is the confidence of the buyer going to come back day after tomorrow?
Okay, I'll answer the second question first. See, I think if you look at how customers are going to react.
Sorry, Srini. I think the link went down with Srini. He must be joining.
Yeah, probably his network is little low. We can continue with other panelists.
Yeah.
Sir, Neil is also there.
Hi, Neil. Hi, Neil. Can't see you.
Hi.
Can't. Okay.
How are you?
There you are. So you're saving money on Gillette. Neil, just quickly, a couple of things, if I can get a little bit of clarity. How's the office market and the retail market doing, Neil, given that, you've got Mindspace, amongst the largest in the country, and the in-orbit malls on the retail, whilst we get Srini back on it, is how are those? I mean, we've been discussing Resi, but just your views as a developer on those two products.
So on the office side, most offices have been continuing to work between 5 and 10% capacity. The new Home Ministry GR has allowed up to 50%. It's also dependent on what each state allows. So it's important for us to get the states to allow companies to work. And therefore, most companies, by and large, have been paying the rent. Some are negotiating, some are trying to defer, but broadly the higher quality companies are paying. In terms of the smaller size companies and all, they've all asked for waivers.
During the lockdown period?
During the lockdown period. On the retail side, we have not billed any tenant because it's shut, and that's a decision which we said we'll work out with the retailers in terms of a partnership. But, that business, the retail side, retailers are suffering, and I see severe distress on that side.
Sorry, Srini, I was just doing one question with Neil, given that I got an opportunity to get him on. So just Neil on, Neil, just continuing with the retail part is, offices, I understand that, the stress may be largely on the lockdown, and then we'll see how the economy really shapes up. On the retail, beyond the lockdown, your thought is that the stress will continue, and you may, or the developers may need to support the retailers.
Yeah, I think the retail business, I was trying to see what's happening in China, and China sales have come to about 50-55% of what they were.
That's right, yes.
This month. Singapore sales, even after closing, didn't really come back to full. And across there, landlords have given some sort of rebate, some revenue share, some lower minimums, and the rest has been deferred for 6 months, 9 months, 1 year, depending on the situation. I think India will have to go through something similar. We need a panel of people like you to help guide landlords and retailers to achieve closure over there, because there will be a lot of give and take over there to create a partnership. I don't think you can get full rent, and as much as people may expect that. And as a retailer, I see that I don't think retailers will be able to afford to pay full rent.
Got it. Because you are both a retailer and a mall owner. So, that brings in a huge clarity. Thank you very much, Neil. Sorry, Srini, we lost the contact with you. So just going back onto the two questions, one is when Kotak looks at funding, what are the parameters for a developer? And the second one, which you were going to answer first, was if the lockdown was to be opened up tomorrow morning, is the buyer going to come in day after tomorrow?
You see, I think as far as the buyer is concerned, while you look at the macro numbers, while mortgage finance has become cheaper thanks to the RBI announcements, at the same time, there are likely to be job losses in organized sector in India. There are likely to be reduction in compensation in the organized sector in India. So when I look at it, for example, somebody who is working in a company and he suddenly finds that the couple of desks down the road, down the same room, couple of people have lost their job. He's not going to be, even though he may be retaining his job, he or she may not be very confident about going and making a commitment for a very large purchase. So to that extent, there will be a little bit of a sentiment issue with regard to customers wanting to come back very quickly to the market. The only way you can get the customer confidence back, I would say, is two things. One is, to the extent that you already have inquiries and your existing customers, protecting the existing customers to making sure that they don't cancel or withdraw is going to be the first thing that all the developers need to be doing. In our existing portfolio, we have had very detailed calls with each of the existing projects that we had funded with the promoters of those companies. We have sat down and scripted what their sales team will be calling the customers and doing. We have done an analysis, for example, where we have said, if you have 100 customers, you divide the 100 customers into 3 categories. Customers who have taken mortgage finance. And from within that, from who have they taken the mortgage finance? Because there is a risk of the mortgage financier not being able to provide capital further. So is it HDFC? Is it somebody else? So then you do that analysis so that you can isolate mortgage finance mein kaun se customers is at risk. Second, customers who are salaried customers and who are not salaried customers. So salaried customers maybe there is a greater level of certainty of the customer continuing to pay. The third category are self-funded customers, where maybe the highest risk of, and then you have to juxtapose it against what percentage has been paid for by the customer. So if the customer has already paid 40-45%, ho sakta hai he may have a trouble for paying the next 1 or 2 EMIs. Usme you have to form the judgment, but at least on your entire sales of 100, you have to do real micro analysis as we sit today and engage with those customers to make sure those customers are retained. Because your
otherwise there is going to be cancellation, Srini. If the thought is that will be there, is it? Wow.
Minimize that. Secondly, engage with the customer and try and see whether you can continue to keep showing progress of your construction. And this is where the ability to get that working capital comes into the picture. If the customer is getting constant updates and say, look, the project is progressing, we have resumed work, we have got, let's say, 100 workers today, maybe 1 month later, you can say there are 200 workers, etc. We are making progress. I think it will give confidence to customers. And at the end of the day, it's also about word of mouth, right? वो अपने दोस्त को जाके बताएगा कि यार, even though we had trouble, that's what you get customers back. But you have to budget for the fact that at least for 2 quarters, you're going to have a very, very muted sales. And it is going to be challenging times, but it's possible to come out of this. But, we need some support, obviously, in terms of financing. That's the way we would look at, how the future, sales will pan out. In terms of what we look at, I think the two important criteria that we look at before financing. One is I mentioned that we need the IBC protection because 80% of the requirement of finance cases that we have seen in the last couple of years have been last mile funding or additional funding, right?
That's right.
And in the absence of that protection, we have not been able to disburse much money. The second is that we want to see in a project that, I know, like Vimal Bhai said, mere ko mera return to chahiye. Lekin if I am making my return and the developer is not making any return on the basis of my assumption, then that's a problem for me, because I don't think if the developer is not going to make a return, he's going to work hard enough or the interest of the developer and ours are aligned. So this is one dilemma that we have always faced. Of course, there are a lot of developers who say, look, I have given a commitment to my customers. Whether I make money or not, I will make sure that the project is handed over. But that's a judgment call of versus A versus B. Many of you in the industry have been there long enough. You guys have seen multiple cycles. So some of you we will take that call and say कि यार ये तो रहने वाला है, चाहे इस project में पैसा नहीं बनाया कहीं और बना लेगा. But many others who are first-time developers who have not done, who don't have a track record will typically struggles to get capital from somebody like us. So I think for us it's important to ensure that, and our assumptions in terms of even in the past where we have had a difference of opinion with people who have come to seek capital from us, is that if the developer assumes a certain amount of sales, let's say over 3 years, our velocity assumptions have generally been lower. So instead of 3 years, it becomes 5 years, in which case the cash flow becomes quite different. So it's not as if we have, we have shut shop, but we want to, our assumptions are a little more conservative.
Yeah, well, it makes sense, Srini.
One more good news, we are looking at more equity kind of risk today than what it was earlier. So for example, we are quite happy to, what we are examining right now is that if liquidity is of paramount importance, and one of the advice that I've been giving many developers is ki boss, you liquidate your inventory. Bhav ka mat dekho, cash flow nikalo. So whether we can, somehow aid that liquidation process to, because we can hold inventory for longer periods of time, whether that makes sense or not. Or whether developers who are willing to, people who have got into, for example, residential developers have got into commercial development without much of experience. If they want to get rid of those projects, we are willing to take it over, buy it 100%, and even do the completion financing required. But at least that gives cash flow to the developer. So we are looking to take multiple, we are obviously upping the risk that we are willing to take, but we want to be able to control the risk. Suppose I buy an under construction commercial project to give liquidity to some developer. I am taking the construction completion risk. I am taking the leasing risk. So all those risks I will take, but at least बाद में जो भी बनेगा उस project से वो मेरा है. Those are the
interesting. Interesting. So Srini, this is a fantastic product. Huh? This is a new product that you are saying that I'm very happy to step into the developer's shoes and inherit the entire project. But then how do you complete it? Is it with the existing developer, or did you bring in a new developer and you complete it the way you want to do it?
That depends upon circumstances. If I find that the developer who's selling the project to me does not have the experience or the expertise, I will have to bring in somebody else. But if the person has the experience or the expertise but has short-term problems, then I might continue with it. So
and this is pure equity.
At the end of the day, this is equity, yes. We are taking the call on the price of the underlying project. Yeah. Particularly in commercial where we do a forward purchase, where we are taking the leasing call, we are taking the, हो सकता है 1 साल लगे लीज होने में या 2 साल लगे लीज होने में. I am willing to take that risk. I mean, it is somewhat similar to what we did in 2006, 2007, where we forward bought a building, where we didn't know, we had our own assumption कि कितने में lease होगा, and we took that risk and कितना time लगेगा lease होने के लिए. We are willing to take that risk today.
Interesting. And it was a very credible developer who did that transaction. Perhaps the developer did not.
So in that case, the developer, we knew that the developer knows how to build it. So we said कि आप ही बना दो. आप सिर्फ मेरे को बिल्डिंग हैंड ओवर कर दो कंप्लीट करके, बाकी हम देख लेंगे.
Anuj, I need one question from Srini. Good morning, Srini. How are you?
Morning.
Hi.
I'm meeting after a long time.
Sir, if you can be quick, we're only 25 minutes. I have a lot to cover.
Anuj, I need to ask one question. Srini, I want to understand कि वो जो गवर्नमेंट ऑफ इंडिया ने करीब 6 महीने पहले ये स्कीम लॉन्च की है लास्ट माइल फंडिंग की, बट यू सी दिस ओनली few cases is sanctioned till today, and out of the 1600 प्रोजेक्ट जो इसमें एटलीस्ट सफर कर रहे हैं, तो वी आर फेसिंग द लॉट ऑफ इश्यूज लाइक द एग्जिस्टिंग लेंडर से एनओसी लेना. मतलब यू सी द पीएसयू बैंक इज totally negative to issue the first charge NOC in favor of this Swami fund, because it is not in their rules. So they need to take the approval from IBA, from RBI, from DFS. So this guideline is not clear. And one thing more, कि क्या एक एजेंसी इन 1600 प्रोजेक्ट को फाइनेंस कर पाएगी जो आज हमारी रिक्वायरमेंट है, इतने सारे प्रोजेक्ट स्टक.
I think Mr. Arora, the second point Srini answered it earlier, that they need similar protection of IBC, but first point is a very valid point that you are saying is
so that should be part of the representation, where we are saying we extend the benefit to everybody, and also please direct the existing banks to give an NOC, particularly where somebody else is willing to put in the money. खुद तो पैसे नहीं दे रहे, कम से कम NOC तो दे दो.
Correct. वो चीज भी क्लियर नहीं है करनी because of the in the system these somewhere some NBFC तो कहीं ना कहीं वो दे रही हैं, but as far as the PSUs bank they are not accepting these things at all. These are the main issues we are facing.
Yeah, no, absolutely, I agree. Srin, just moving on, how can NAREDCO and the government work together proactively? One is the stimulus package, that Niranjan Bhai and Rajan and the full team are championing it and leading from the front. Neil has been in many of these meetings as well. What else do you think the two can do as partners?
See, I think, in this hour where obviously everybody is asking for something from the government, from our perspective, when we go and ask something from the government, but simultaneously we offer something to the government, you will probably get a much better reception. And this is a brief that we had Niranjan and I had a discussion on this very briefly earlier. See, many of us have completed assets or near completed assets. And the government is looking for isolation facilities, etc. One suggestion that I wanted to give to the industry is that what if we were to go and tell the government, we have inventory all over the countryside, completed assets we are willing to sell to the government at less than, let's say, ready reckoner value. Let the government pay and take it over and make it as isolation facilities. Thereafter, the government has two choices. One, the government can ask the developer to sell it later after refurbishing it. Or the government can use it towards, accommodation of their own government officers. To give you an example, I was reading on the net that there was a parliament question in Delhi, and I can see Talwar Saab there.
Morning.
There was a parliament question.
Morning, sir.
What is the shortage of government accommodation in Delhi alone? The shortage is 40,000 units of government accommodation for the government. Now Bharat Sarkar is spending money through NBCC, constructing stuff in Sarojini Nagar and various other places. वो सब बंद करा दो. Developer से अभी माल खरीद लो. जो budget तुमने already budget कर रखा है to build new government quarters, buy it from the developer. There is liquidity which goes into the developer system. Those land parcels which are in the prime locations in Delhi are not going away anywhere. We can always figure out what to do with it later. But immediate liquidity developer industry ko aa jata, and this is voluntary. Any developer can go and provide their property to the state government or the central government, as the case may be. Immediate liquidity comes in. Government also feels that we are willing to sell below ready reckoner price or whatever is the price that we offer. क्योंकि government keeps telling us आप लोग inventory नहीं काटते हो, आप लोग inventory नहीं काटते हो. तो हमारा problem क्या है कि हम inventory काटने निकले तो बाकी customer भाग जाता है. हमको आज मौका मिला है कि भारत सरकार को ही दे दो. इन्वेंट्री भी मैं काट रहा हूँ, आप कह रहे हो इन्वेंट्री काट रहे हो, मैं आई एम कटिंग इन्वेंट्री, आई एम कटिंग प्राइस एंड आई एम ऑफरिंग इट टू यू एंड यू हैव अ यूज फॉर इट टुडे as an isolation facility or as future accommodation for your own officers, and immediately आपको एक liquidity injection हो जाएगा. This was one of the suggestions. So when we go and ask for concession from the government, if एक हाथ दो और एक हाथ लो.
Rajiv, what a great suggestion. What a great suggestion that Srini is saying is that the unsold completed inventory that we have today, the government takes it over, buys it, and you fix up a price, whatever that price is, and it depends on whether the developer wants to sell it or not. And what he's saying is that, interestingly, you use it as a quarantine facility in these difficult times, and thereafter you need to house your employees because that's why you're building new. Use this and give it to them for their as their employees. I think we should take it up. Very nice, very proactive, very collaborative.
Anuj, one problem is if these are buildings that are already ready and half occupied, I don't think the existing guys are going to like the building being used as quarantine. That's one thing. And if it's under construction, there are no facilities. So how will you have a quarantine there?
No, this will be only completed full blocks.
I know, but then those who are already living there, they are not going to like COVID.
No, full block. Full block means that there is nobody there. It's a full block.
Pura block hoga.
Pura block hona chahiye.
But yeah, okay.
Tara ma'am, it's one of the idea out of the box what Srini sir is telling. So by that we can work out further. This is out of the box thinking.
No, but what I'm saying is these are questions that they will ask. So let's have answers ready for that.
Very true. Very true. Absolutely, ma'am. The existing occupiers would not allow that to happen if you build it into quarantine facility. This is like a development which is completed. but unsold.
Yeah, yeah.
But remember, the logical answer to that is many of the hotels today are operating as quarantine facility. Are you telling me that no guests will go into those hotels later?
Not later, Srini. I'm talking about currently.
No, I understand that. I'm just saying that if adequate precautions are taken, even today, when the government says that this particular building or this particular locality is now cordoned off, they are isolating that. So there are ways to do it. But yes, but important thing is when you go to the government, they must see you as coming and offering something. How difficult or easy to execute is the next part of it.
I think this is a very good
much
idea.
better reception. Yes, yeah.
Srini, in fact, two parts of this idea. One is, of course, quarantine. The other one is that, yes, if government feels that developers should lower prices and offload inventory stocks, then, okay, let them come ahead. Why should government now start construction again? You're very, very correct.
Yes, absolutely.
Prime places and prime locations remain with the government. Let them go all over the country. I mean, if there are, wherever there is ready-made inventory, it should be invested into. And our market prices are very well known. They are registered. You tell us how much to lower and you take it at a lower price. Simple as that.
Correct.
At least there's
Beautiful.
cash inflow there.
Very, and it's a bulk buy, Rajiv.
Yeah,
it's a bulk buy.
No example मैंने दिया था वो सिर्फ दिल्ली के shortage का था. But I'm quite sure there is a shortage of state government accommodation in every state. Maharashtra, for example, MADA has not been able to deliver anything in the last few years.
It is a fantastic thing.
All over the country. I think we are having a meeting with the minister today at 3:30. One should float it to him.
And Rajiv, it is very collaborative from our side. What Srini is saying is we're actually giving it for quarantine and we're saying is please buy it and we're happy to agree with you at what price. And also it is an option to the developer. We're not saying is that you have to, it's not a must.
Correct. And plus, these are already registered prices.
That's right.
You want to take a haircut on that of 10% or 20% for the bulk purchase. Yes. I mean, if there is a case against any developer who sells it at a price which is not lower by 10 or 20% to any registered sale on that property. Very, very correct.
Srini, just moving on this.
Manoj, if I may just interrupt.
Yeah.
This also helps us plead with the government for the abolition of 43 CA.
Because the government is the buyer.
If there is a meeting with the government, then this plea also helps us take a stand that 43 CA must go.
Good point, Rajiv. Good point. Absolutely. Just quickly, Srini, a lot of questions coming on. Would subvention, if it was to come back, improve the sales? And what is it that needs to be done to be able to bring back subvention scheme?
See, subvention will come back in some form. That's what I'm hearing. Whether that will have a positive impact on sale, subvention is useful when there is a customer sentiment to actually continue to purchase, or you are trying to nudge the customer to who's sitting on the fence. Subvention will have some positive impact, but for the sentiment to turn, I think greater stability in the economy is required. It will come back in some form. I'm hearing that that's what is likely to happen.
Perfect. I've last three sets of questions, Srini. One is, do you think that the cost of funding coming in from international, and Tara ma'am also said that, will become more reasonable given that there has been pressure on the interest rates internationally? And second is, other than you on the equity side, do you think there is going to be more equity that will start to come into this sector?
Okay, as far as international capital is concerned, it's a double-edged sword as it stands today. See, values have been destroyed everywhere in the world, and global capital it's like water. It will go where, the depth is the greatest.
Good point.
And
yes.
Therefore, if the international global capital sees better risk-reward returns in other markets or developed markets, that's where it will go first. Secondly, remember that a very large component of global surplus capital was linked to the energy industry. Whether I don't know whether many of you read this. One of the largest sovereign wealth funds in the world is the Norwegian Sovereign Wealth Fund.
Correct.
Norway's, 80% of the economy is on oil and gas. And their sovereign wealth fund became so large, they actually created two sovereign wealth funds. for the first time, they are actually liquidating their public market positions to meet their requirements. So that's the value of destruction that has happened in the oil markets and energy markets. So while there is a lot of money that the governments elsewhere in the world are throwing into the domestic economy, investable capital that comes out of some of these places is also struggling to meet some of their own obligations with regard to what's happened to the oil prices. Secondly, the tendency for many of these pension funds and others to go to the market in which they are most familiar with, which is their home markets, if values have got really destroyed, will be very high. This is not to say that capital will not come to India, but the reality of it is that World Bank, for example, has projected every other economy will be in negative, with the exception of India, which will still produce a 1.6 to 1.8% growth this year. So there is a positive to that as well. So if there is a place in which people may want to put in capital, that may be India. I can share with you that some of the conversation that we have had with some of the large pension funds who have traditionally looked at credit strategies in India, people have not switched off on India yet. They are still evaluating as to what they can do. The price at which that will come, that is a $1 million question. I don't think we can today hazard a guess on that. I would be very happy if the target returns that they're looking for credit transactions are correspondingly reduced with regard to India as well, because if the benchmark returns in their home markets is either negative or just 1%, theoretically they should be asking for lower returns than what they were seeking earlier.
Beautiful. Just continuing on this one, Srini, on the equity side, do you think we will get in equity, or you think this will be largely a credit game coming in from international?
If you look at real estate investments and all this data that is being put out as FDI in real estate, etc., in the last 5 years, if you look at it, large numbers have been thrown around. But if you look at the risk that capital has taken, the year in which, let's say, we had $8 billion in the last few years that came in, they did not take any risk. Majority of that capital to bana banaya maal khareed raha.
Yes. Actually,
so
you're very correct.
$8 billion mein to Talwar sahab $2-3 billion kha gaye. London sab kha gaye. वो embassy खा गया. हमारे बाकी residential वालों को तो कुछ खास मिला नहीं.
No, and the risk is very zero. They are going into completed assets.
So risk capital was not coming into the country even when those billions were coming into the country. So the risk capital is not yet there for construction risk, and that continues to remain the case because of whatever historical reason and because of the inherent nature of construction and development risk in India. So the risk premium for development risk is very high in India. That volume of capital continues to be small.
Got it. Last two sets of questions. One is a lot of people have asked is, do you think for affordable housing, the NBFCs may be able to lower their expectation on return, or it doesn't matter whether you're doing affordable or mid-level or premium or luxury?
I don't think for them it makes a difference. Tara may probably be a better person to answer that question.
I think what happens in affordable, one should accept the fact that the risk is higher, and also we are not getting, like in GM, we are not getting the required funds from the bankers for us to on-lend. If that tap is open, of course we reduce the rate of interest. It's a question of asset liability mix, right? Can you hear me?
Got it. Yes. We can hear you well.
It all depends. If we get cheaper funds, we on-lend it cheaper. But because being the unorganized sector is considered more risky than what HDFCs and the other banks are giving, so our cost of funds are also very, very high. So if that can be helped by the government, that organizations like PM Financials and others who are doing home loans for affordable housing can allow to get cheaper funds. You will definitely.
Yes, I agree. I've last sets of questions, but before that, Niranjan Bhai, I'm just going to come to you, Niranjan Bhai. In terms of the representations to the government, I know NAREDCO has done a lot of it. Do you think there is a representation or there is a merit to the government to say is that treat this sector on a priority than some of the other segments that they are looking at? Given that we have a huge amount of construction workforce, because it does not appear to me that, we are getting as much attraction at this moment in time, and given that there is so much mayhem that has gone in. So what do you think is really required to be able to make sure, as Srini also said, is that, we get heard at this moment in time from the various quarters?
So the answer to that question is very simple. Number one, that they have given priority to affordable housing, and what you're saying is not correct, because they have given from the exchequer about 65,000 crores of rupees as interest subvention for a period of 50 years, which never happened in any other sector. Number two, ATIB is the only 100% tax-free sector in the entire budget in the last 1 year. So there is no other sector now which has been continued to be on a tax-free status. So the government does believe that whatever, and plus GST on affordable housing is 1%. So that is the third thing which is important. But what you're saying is right in the sense that this aspect of funding which was required to be given necessary priority because we are such a high employer, as well as we contribute so much to GDP, and we are suffering since this last 4 or 5 changes of restructure took place. The adequacy of what we need as compared to what we are getting is much more less. So what we are looking for really is to add on to whatever has been done and say that we need. So 2 things have happened. One, the Reserve Bank of India has done something today, as you know, that as far as real estate, they have given from 1 year to 2 years, as was confirmed by Srini. And also the fact that they have considered in the housing sector, commercial real estate as an important factor and distinguished it and separately made provisions for it. And the third, that they have given separate funding and refunding to NHB to give to HFIs and other things. Also, separate funds will be made available. So it's not that the government is not doing, but the adequacy of what is needed. But more than that, I would go back to what Srini mentioned, and I think that's much more important, that the projects which are stuck with last mile funding, the Swami Fund is grossly inadequate to take care of the thousands and thousands of projects which are there. So I think the job is back to us to really again re-represent along with him. And in fact, Mr. Deepak Parekh also mentioned that he would not be averse to start a separate fund, which would be for stress. But what Srini has suggested is even better. Why not allow anybody and everybody in terms of institutional funding to get that benefit which is given to a Swami Fund in order to do it? So any bank, financial institutions can give this fund in order to make it happen. So that's a positive note. And I think a great pickup from what Srini mentioned. It will make a huge difference if we can get and achieve this thing happening across the board. Because then everybody would possibly do the last mile funding. I think that's a very, very big learning I got just now from Srini. We never thought about it, that we always talked about the stress fund. Now we could have a universal that every bank or financial institution is ability to provide last mile. The unique learning for me this morning.
Absolutely. I agree with that. And we've run out of time, but Srini, I'm going to ask you 2 final questions from my side. What are the learnings or what is the messaging that we should give to our audience? Here, learnings perhaps from the past. You and I have been there. We saw how 2008 came in. Many of the players, as you rightly said, have been there for long. Some may have come subsequent to that. And then the messaging, more importantly, messaging.
See, from our point of view, I would say the key learning is that when the times are tough, if you don't engage with the customer, for us, a customer may be a developer or other companies. For you, it may be other retail customers. And I think you were having a brief interaction with Neil talking about retailers and retail. If you don't engage with the customer in difficult times, I think, look, everybody is rational. Everybody knows that there is a black swan event and everybody is going to take some hit. So that's one. I think if you switch off your phone, not take calls from either customers, bankers, etc., that's not going to help. When it is difficult, that's when you speak to them more often. Secondly, from our side, what we are doing is that the question that we are asking our portfolio companies, that we know that sales are not going to happen. We know construction is going to be difficult. What is it that we can do to reduce your pain? And if necessary, what is it that we can do in terms of budgeting if I have to put in additional money to make sure construction continues? Because I know for a fact that if you don't complete the project, मेरा वैसे भी पैसा नहीं निकलने वाला है. So we are, so might as well make sure the asset is completed. So we are budgeting. So maybe I'll make lesser return, but we are budgeting to make sure that our partners are willing to are able to survive. Maybe I'll make money in some other project with it. Engaging with the customer is absolutely critical. I think the second is, I would say that cut costs. Don't cut people, but cut costs. You have to be really, really hard on costs. And most importantly, you have to show that from what you do personally. And if you cut your costs, and we've seen this, we have done this in our firm. I remember, see, I've been with Kotak now 27 years. We've done this when we had the Harshad Mehta scam. We have done this in 2018. We have done this in 1999 after the Ketan Parekh scam. If you have to really look at every item of cost, सबसे छोटी सी चीज, you have to cut it. And for example, today in our firm, despite all of us being there, other than Mr. Uday Kotak, who travels in business class, none of us travel in business class.
Wow.
Wow. None of us. So you have to cut the cost. So this was actually done during the previous cost cutting time. कि सबका business class काट दो. उसके बाद we never reinstated it. हालत पड़ जाती है.
Anuj.
Hi, Rajiv. Yeah, please go
Anuj,
ahead.
I have one issue to raise for everyone.
Should I close this one and then Rajiv, or you want to do it now?
I just want to raise it because we can get some kind of examples from protocols from abroad and in India. A large number of commercial establishments are supposed to open and hopefully will open soon. What will be the protocol for dealing with a COVID case? And what is the practice abroad or in Singapore or in other places in the country? And that if there is a case, you isolate that, or is it that the full building gets closed? Because Indians, are very sweeping in their authority. So what is the example which has been followed in various places in the world? Because it's not the only place which is happening and will happen in India. So anyone who has an idea of the protocols for dealing with such cases, dealing with how to open, what precautions to take, I think that would be a very good session for NAREDCO itself.
Absolutely. And, Rajiv, it'll be easy to get in. Maybe, Srini or Neil will be able to get in, one of these large private equity guys who have, global operations. You have as well, Rajiv, GIC. They'll be able to bring in a lot of it. Srini has a lot of relationships with the international funds, both personally and officially, and Neil obviously with Blackstone. So, it'll be worth to get in. And Rajan, it's a very, very good topic. What Rajiv is saying is, this is looking forward now to say is that when the establishments start to open, and then even Rajiv, I would even say on the residential, what happens if a customer had a virus and comes in, does it mean that the construction site needs to be then quarantined, which means the construction stops?
That's it.
Which will be quite detrimental.
One would be construction, the other one would be offices where offices will function.
Yes, absolutely. Srini, fantastic. I know we've run over time. Before I hand it to Rajan, I just want to say 7 or 8 things that I've learned, and I know many of us have learned. Srini, thank you. One is this PSUs. Why don't we get the money coming into the sector? So we understood it. Why it is not. Second, Naranjan Bhai also said this is that, why the NBFCs are largely reluctant on the last mile funding because, they need the similar protection as what Swami Fund has from the IBC. Third is, equity, which you are doing. I mean, it's like fantastic. What a great learning to be able to understand that, you know, Kotak is willing to, at this moment in time, put money on equity. Fourth, the cost of funding is what it is because, you know, it's international capital. I think Tara very eloquently and very forcefully answered that point is that it's up to you if you want. I mean, it's like water, as you said, is, you know, it'll go wherever it finds the opportunity to come in at the cost that it'll come in. Fifth is very important, and I think that is, you know, communicate, whether it is with your customers to be able to retain them or whether it is with your banks to make sure that there is a dialogue that is happening. Don't not answer your phone in that. Sixth is continue with the construction, which, you know, is a repeated message, Srini, is coming from everywhere, that continue with the construction. You know, delighted to hear that many of the borrowers from your fund, you're looking at it carefully and saying is, what is it that we need to do? Do we need to handhold you, given that these sales over the next, you know, 1 or 2 quarters maybe slow? Who knows, you know, where that sentiment goes in. The last one, I loved it. And, you know, it is applicable to people like me as well, Srini, is manage your costs. You know, when you were saying, Srini, the way I was visualizing this, you know, it is like the Mumbai-Pune expressway. And, you know, there is an accident that you can see in the front that has happened. And, you know, you are going at 140 miles an hour. I think you just need to slow and make sure that you're able to maneuver through that accident. And on the other side of the highway, it's beautiful. I mean, you can get back to 180 miles an hour. It is just this block, and if you can slow your costs and conserve the cash, you will be able to maneuver through that accident beautifully and then come out on the other side. We also saw the letter which came out public, which Kotak did on the senior management, you know, cost. I mean, like, fantastic. Even before any one of us smelled coffee, you guys had already taken those decisions. So, you know, real good learning. Thank you very much, Srini, for coming in.
Thank you.
You know, really appreciate. I know how busy you are. Lots of people. Perhaps there'll be a lot of people who would want to connect with you post this with these words. I'm going to hand it back, Rajan. Over to you.
Anuj, thank you very much. And Srini, once again, thanks. And one request from all the members, which I do it to all financial institutions. I know it's we are asking too much for ourselves, but now I'm asking on behalf of consumers, make the home loan at 6%. See, today, thanks to RBI once again reduced the reverse repo rate by 0.25%. So if you make the home loan if you can get the home loan at 6%, I will tell you, we don't require any shops or any benefit from anybody. Automatically the sales will start. The moment the sales starts, everything, the answer to all these things, the way it was said, entertainment. So I will tell you only one thing: sales. And we can not 3 times, we can repeat it 30 times. The answer is only one. I think my 2 people are there on the panel who wants to ask you question. One is Rajan Daryanani from Nashik and Satish Kumar from Karnataka. So I would request Rajan Daryanani to ask first, but I want you to ask the question and be brief because we are already time overrun. And one small announcement to all the people. Once again, we have a session with the Minister Hardeep Singh Puri as well as Durga Shankar Mishra at 3:15. So please log in before time so that we can hear the minister as well as the secretary too. Over to you, Rajan.
Thank you. The question is not really related to the funding or the real estate per se.
Sorry, Rajan.
I'm sorry.
Yeah, now we can hear you.
Sorry.
Please go ahead.
Sorry. Yeah, a lot of developers in tier 2, tier 3 cities, you know, one of their questions post demonetization, GST, RERA, etc., is what are the alternative diversifications that are feasible and workable in smaller towns for developers to get into?
Alternative in terms of in real estate or any other business?
Both. No, obviously related to real estate though. Because all of us are sitting on land banks. All of us, we probably not qualified to enter fresh businesses.
Well, I think that would depend from city to city. For example, in a city like Kota, which is a which has a very large student population. That's a different proposition. In other cities, there are disorganized pieces of the real estate business. I mean, co-living is a fashionable way to say the same thing. But when you think about even a city like Indore or other places where there are lots of educational institutions, I think the developers today are in a position to, for example, completely refurbish, take over, maybe provide some benefit on the hostels. Go talk to the university and see what you can do. So that's one aspect of it, to see whether you can take over the student accommodation and do something else for them on that. Other than that, I'm probably not the subject matter expert on that, but I would only say think out of the box. Look around what is unique to your particular city, because each city has its own characteristics and driver. In Udaipur, I would say, build a very interesting food court like Mr. Talwar has done in Gurgaon, but only for all the unique Rajasthani food items that you have, and make it a destination. Log destination wedding ke liye nahi jana chahiye, destination khane ke liye jana chahiye.
Thank you.
Satish, yes.
Yeah.
Satish, I need to let Srini go as well. He's got other webinars.
Yeah,
So
this one small question. Yes.
Please.
Mr. Srini, fantastic talk there. My question is that I understand that you are open to newer products and newer way of thinking. Is it not the right time to come out from the present formula, the set formula of the 35%, 30% equity and 35% coming from the banks and then 35% coming from sales? And why are we factoring in the sales in between? Why can't we follow the model of where Singapore or any other developed countries, where the 70% comes from the banks and whatever the sales money that comes in is offset on the whatever the borrowing percentage is. If the builder is able to build or able to sell 70%, then he doesn't need any funding at all on the project. Whereas if he is not selling one also, the project is completed. The project completion will not be a varying part on that.
Yeah, go ahead, Anuj.
Go ahead. No, I was just saying is that I thought Tara had answered that very well earlier.
The answer is simple. There is 35, lending ka 35 going from 35 to 70 is not a problem. It is the first 35 which is where the problem is, which is the equity of the developer.
No, the equity part, I'm sure, in all the cases, many cases, I'm not talking about the places where it is not. The banker has got the discretion on that. But the 30% equity, if it is made sure that it is already there, the factoring in of 35% from the sales is what I don't want that to happen.
Srini,
if it can be factored in.
Please.
Can I answer this? Guys, you must understand one of the main reasons why today a lot of developers are in the position that they are today is because they have leveraged themselves to the hilt. The more you borrow, the more liabilities you have to return. So the time-tested thing is 30-35% is brought by the developer, 30-35% or 40% is from sales, and the balance borrowing. That's the only way you can keep the project costs under control.
Yeah, let me just add to that. You see, any equity that a developer is putting into a project, which is also borrowed money, is bound to somewhere go into trouble. And this is not just the developer ka bimari. This is the bimari of even industries.
Yes.
You know of infrastructure companies and other companies which are multi-layer developed, borrowed. All of those are in trouble today. So you are going to see a situation, not just in real estate, but in industry also, where people have built their businesses by borrowing for the promoter contribution also. They are going to lose their businesses.
Yes.
I am not, I totally agree with you, but I am not agreeing when the equity from the developers. Rajan bhai,
later. Arey Satish, we are already 1:30 was the time. Srini wanted to go, so we can't stretch on. Anush, thank you very much. Srini,
thank you, Rajan.
Thank you.
Thank you, Srini.
So much, Rajan bhai. Thank you, Anuj. Thank you, everybody, for giving me the platform and
thank you.
listen to talk to all of you. Thank you.
Sir, we will all come to you for the loans.
Thank you. You're welcome.
Thank you, Tara ma'am.
Thank you.
Thanks. Bye.
Bye.
Bye-bye.
Bye. Bye.